Hey everyone, it's Mike and welcome to lesson number 2, viewing point of control. There's so many different volume footprint charts available nowadays that pretty much everyone has access to a volume footprint chart. So if you're not using a volume footprint chart, I think you should really consider it, and especially if you get one that's got the information on it that you need. I have my volume footprint chart called the Order Flows Trader, which I have actually enhanced point of controls on it, which I'll talk a little bit later in here, but I don't want to make this necessarily a video about my tools. I just want to talk about the different ways to view point of control. And again, if you feel point of control is something that can really drastically help your trading, then definitely you want to upgrade to more tools for trading. Now, before I begin, a brief disclaimer: this presentation is for educational and informational purposes only, and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, to see order flow, you're going to need to use a volume footprint chart. And every charting software that offers a footprint chart should allow you to display the point of control in the bar. Sierra Charts has their numbers bar, which is basically the volume footprint. They just call it the numbers bar. TradeStation, you get it as an add-on app. I've seen it. I don't use TradeStation anymore. I had TradeStation back in the 90s, actually, 1990s. But it is available as an add-on app. Obviously, there's Market Delta, which most people are familiar with if you're familiar with order flow. NinjaTrader, you get it as an add-on. You can even get it for free, a basic one, I think, from futures.io, or you get a paid version of NinjaTrader 8, which is like $1,000, and they've got what they call the order flow plus tools on there. I don't know. I haven't seen them personally, because I have my own software, but the feedback that I get from traders is it's kind of a basic version, and if you're paying $1,000 for NinjaTrader 8 just to get that, then don't bother. But again, if you're trading through NinjaTrader, you should have a paid version. MotiveWave has it. Multicharts also. MotiveWave, is more on Elliott analysis, but they also offer the volume footprint charts and multicharts. They call them the volume delta charts there. And I'm sure there's some other software that I probably left out, but again, there's so many trading software, but these are the main ones, that are available to traders. And again, just realize, some software may have a slightly different name for the volume footprint chart. And the easiest way to view them is to draw a box around the level with the most volume in the bar. Personally, I prefer to shade the box a different color than the background so the point of control stands out more. Again, some people like just to have the outline box. I was showing you charts earlier with clear background, just the box around. On NinjaTrader, I prefer it shaded. On Sierra Charts, I don't shade it. I just keep it a square around it, or sorry, the same background. I just have the rectangle around it. So this is how it looks on the Order Flows Trader software. This is not the native version of NinjaTrader Order Flows Plus tool. This is my version. And you can see, each bar has the point of control. Now, another thing that you can do is, some software will allow you to do it, some won't, is to shade another color for the second and third point of controls in the bar. So you have the point of control, which is the most volume in the bar. Then obviously you're going to have other levels. You have a second level and a third level. The second most volume in the bar, the third most volume in the bar. And by adding the second and third point of control levels, you can have stronger potential value areas, which can act as support or resistance. Most of the time, though, you're going to see bars where the different levels of point of controls are spread out. Now, this is on my Order Flows Trader for NT8, and this is what it looks like here. You can see the bar. You've got 4 point of controls. Now, you can shade these different colors. When I look at them, honestly, unless I've look at them all the time, I will keep them the same, because if you have the most point of control one color, the second another color, second another color, honestly, if it's something that you're not using day in, day out, you're going to lose track of. If it's just something that you want to take a look at, during the trading day, just block them together, all the same colors. But you can change the colors of them. Some people like to, but again, unless it's something that you're using religiously in your trading, if you shade them other colors, you're going to forget what the colors mean, their importance, which is the strongest one, which is the second, which is the third. So this is what it looks like, 3 point of controls in a bar. And, it is kind of revealing. I'm going to talk about a couple setups using the second and third point of controls in the bar. And on the Order Flows Trader software, this is where you would change it. I could change the color from black. I keep them all black, and the opacity to 50%, so it's not all black. It turns out as this gray color actually. But again, if you want to make one yellow and one, I don't know what color, purple, you can do that. But again, it's a personal choice. I don't want to say, no, you got to do it this color. Then people would say, well, Mike said you got to have it as, yellow color for the second. No, do what works for you and what you can work with. Now, as I mentioned before, point of controls can be used as support and resistance. But what I didn't mention was that it can also be used as a price target. You can draw a line out from point of control and look for it to be retested in the future. Now, Sierra charts, it's referred to as an intersection line. Now, this is for people that use Sierra charts. Keep in mind that not every point of control is going to matter, so be careful using this or else your chart is going to end up with a lot of lines. And it's available for free on Sierra charts. I showed you a chart in a previous lesson, but this is what it's going to look like. All these lines going from left to right are previous point of controls. Obviously, it'll stop when it reaches there. And if a market is moving up, say you've got on a position 5 contracts, okay, you could have a target up here, another one at the next point of control, another one at the next point of control, another one at the next point of control, like that. You should be looking, just because, we sold off and we start rallying doesn't mean that every point of control is going to be taken out. No, we could hit one and then start selling off again. But again, it's going to get confusing if you just want to see it on your chart all the time, because you're going to end up with a lot of lines, especially if it's a market that's selling off and then rallying back up and then selling off again, the way the markets have been the last couple of weeks. This is the end of October 2018. Now, you can see here, right, how the market is selling off. So here on the left, you got this first line going across on top. It hasn't reached that level yet. You got another line that was reached here. Then you got another line coming out here, hasn't reached it yet. Then this line at 9:35, you reached it. This is a 1 minute chart. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 minutes before you retrace back up to that level. At the way the market's going now, I don't know when we're going to come back up to 2700, 2701, 2704. But those are targets if the market starts rallying back up. And again, if you're trading on a dome and you're knowing where these areas are and you're coming back up to these areas, okay, I know I had a point of control there. Maybe that market can trade back up there and start selling off. So you're going to watch the price action the price activity that's going on there to get short. Imagine, you just threw in some offers here, at this point of control here. The first time you came up, you missed it by a tick. Second time, yeah, you got filled, and then you just sold off immediately. 6 points rather over the next 2 bars. Up here, same thing. You came up here, 26.98 and a half. Then what happens over the next 2 bars? You sell down to 95. So it can give you some nice low risk entries. This one's a little bit cleaner, but again, it does. You got to watch, you got to manage your trades. Like here, if you have this as support, you came down here, you got through it by a few ticks and rallied up, back and forth. Here, you just came down, sold off right through it. So, if you're using it as support and resistance, manage your trade, have tight stops. But again, it's something, if you're using 2 or 3 ticks, but you're trying to get, 10 or 15 ticks out of the market, then it's going to be worth it to you. So on the settings for the numbers bars, it's under this point of control. What you do is it's this one up here, highlight point of control in. It's in line number 71. This is one of the drawbacks, I think, of Sierra charts is it takes a while getting used to it, all the different settings that you can play around with. But it's this one, column 1 with extension line until further intersection. If you just have column 1, it's just the rectangle around the box. Now, point of control as a bastardized moving average or VWAP. Can it be done? Once you accept that point of control as being the true value of the bar, it could be a value to plot, the same way you would a moving average. Basically, you track where we are above or below value. If a lot of people draw moving averages based on the closing price or based on the midpoint, well, why not draw it on the point of control? And it's used by some traders actually that I know as a trailing stop. They like to trail their stop at what they consider value. And there's a tool from Emoji Trading that's called POC Moving Average. It's just cheap. It's $4.99 a month. It's part of a bigger package of the order flow tools that you can get. But if you just want this one particular one, it's only $4.99 a month. That's nothing, right? $5. It's cheaper. Go to Starbucks. A coffee costs $5.52 or something like that, depending on which county I'm buying it in. But why not? Why not try it? And how does it look? It looks similar to a moving average, honestly. This purple line is the 9-bar point of control moving average. You could set up to 3, and this green one is the actual point of control in each bar. I've turned off the other 2. Otherwise, you got all these lines, and I'm not a moving average type of guy, but it does help give you a bias into what the market is doing. You can see as we're below the moving average point of control, market's below it. You start rallying back up. Boom, point of control is worth it, above it. Yeah, I'm not a big moving average guy. Trend followers are, but it just gives you another trend to follow. If you're into, trading around moving averages, definitely this is something that you can add to your trading arsenal. I say, you got to get the share charts, and it's a cheap add-on, $5, but it's definitely something that you should definitely give a try to. Especially if you're struggling, it's a great starting off point in your trading. So point of control moving averages work essentially the same as a moving average. You'll be looking for crossovers and trading bias. Are we above or below? There's people that when we're above the moving averages, they don't want to be short. If they're below, they don't want to be long. I don't approach it that way, but some people do. And if you're that type, this is definitely something you'd want to consider. Now, prominent point of control, it's a unique tool to the order flows trader software, which runs on NT8. And again, you got to remember that not all prices are the same, and you shouldn't treat all prices as the same. Depending on the volume traded and where traded in a bar relative to recent price activity, it's going to help you determine if a point of control is prominent, and they act as immediate support and resistance. You could actually get long or short off of them, or you can trade for pullbacks coming back towards them. And on the order flows trader, it will highlight the point of control that is important, the prominent point of controls. And you see how the market sold off from here, rallied from here, came down here, rallied back up here. It reads the price action, it reads the point of control in the order flow, and will highlight it in the bar. It's a great visual thing. Traders, people nowadays are visual. I'm very visual. I like to look at photos on Facebook and Instagram, and then move on. I make my decision. Do I want to read the article further or read the post further based on the image? And trading is the same way. If I see something interesting, I thought, why not just have it put into the chart and save myself that extra step of analysis trying to figure out, okay, is this point of control important? Well, I took my set of rules for determining if point of control is important and put it into the software so that it can indicate on the bar for me. Here you notice what happens. You had this sort of cluster. I want to say cluster. You got 2 point of controls right around the same level here, around 910, 912. Market sold off to a prominent point of control, a buying prominent point of control, rallied up to a prominent point of control, which is a sell. But looky here, where does this point of control line up? It lines up with the previous prominent point of controls here. So imagine if you sold off here, rally up here, don't think the market's going to go on to infinity. That previously you had some prominent point of controls, areas where there was strong resistance in the market. You could, if you're long from down here, this is where you'd be looking to get out. And if you're long from down here, you could think about taking a short from up here. Not just take your profits, but actually take a short from up here, because that you're running into an area where you have some resistance before. And if you're just looking at this resistance, it's kind of hidden. I don't think people would normally draw out a line and say, well, I got resistance here, because this is sort of in, a market that's going sideways. Markets sold often just went sideways. People aren't going to necessarily consider that as resistance. This is a 1 minute chart in the E-minis. The market's been very all over the place lately, and you can see here it's coming down into a low, prominent point of control down here. What does the market do? It, bar closes up, rallies back, sells off back down to that point of control. It gets within 2 ticks past it, and then rallies back up. If you're just sitting down here with the bid, you'd be nice reward. Up here, where you rally, you sell off, you rally back up to that point of control. Again, how do you know you're wrong? Well, if you go against this point of control, if you start trading above the high of this bar, just as if you were to break this low, I know I got buying down here. If I were to see more buying down here, then that's going to tell me that's a great buying opportunity. And we'll look what happens after you hit this low. Seeing the aggressive buying in this bar, 1, 2, 3, 4, 5 imbalances on the way back up. This one just blew right through it, but that's how it goes sometimes. So this concludes lesson number 2. In the next lesson, I'm going to discuss using point of control as support and resistance. So I'll see you on the next lesson. Bye bye.